We all know we get taxed on our dividends, but what's happening and how are things changing? Hi, I'm Kimberly Shapcott, qualified chartered accountant, property investor and entrepreneur. Let's sit down and have a chat. Dividend tax. So what has happened and what is happening going forward? Well, the first thing to mention is the rates were at 7.5% and 32.5% and the higher rate percentage, but they've now changed. So any dividends that you are taking will be subject to the 8.75%, the 33.75% and the 39.35%. And this is what you'll be paying depending if you're in the basic rate tax band, the higher rate tax band or the additional rate tax band. And just remember that that additional rate tax band is now kicking in from 125,000, so it has reduced slightly as well. So we now know that our tax is going to be slightly higher for any dividends that we're taking by this 1.25% increase that they did a year or so ago. Now, the other thing that we do have is that the first 2,000 of dividends is at 0% tax. So this meant any element of income, whether you're a basic rate taxpayer, a higher rate taxpayer, or even an additional rate taxpayer, you would still get the first 2,000 at 0%, which is fabulous. However, this is going to be changing, and over the next couple of years, we are going to be seeing changes in this allowance or this tax rate. So the tax rate is still going to be staying at 0%. However, the amount that we can get at 0% will be reducing. So up until the 5th of April 2023, there is a 2,000 tax bracket that we can get at 0%. After that, from the 6th of April 2023 through to the 5th of April 2024, we'll be able to now get £1,000 at 0%. After that, and from the 6th of April 2024, this will be going down to £500. So the first 500 will be at 0%, and then it will be at the appropriate tax rate, depending whether you're a basic rate taxpayer, high rate taxpayer, or an additional rate taxpayer. So as you can see, the tax, unfortunately, in this area is going to be going up very slightly. It's not big numbers, but it is an increase. So what are those numbers, you may ask, and how much is it going to be costing me? If we start with the 2023 to 2024 tax year, then the increase for a basic rate taxpayer is going to be £87.50. So it's not big numbers, but it is something extra that we're going to have to be paying. In the following tax year, in 2024 to 2025, it's going to cost us an extra £131.25 for having exactly the same amount of income. So again, it is starting to have a hit, but unfortunately there's not really much we can do about it. Now, for those that are high rate taxpayers and additional rate taxpayers, those numbers are obviously slightly higher. So for a high rate taxpayer in the 2023-2024 tax year, you can expect your tax bill to be increasing by £337.50. And in the following tax year, that's going to go up a little bit further to £506.25. So it is starting to bite, unfortunately, with these numbers. Now, for those in the additional rate tax bracket, these numbers sadly are going to be that little bit higher. So for the 23-24 tax year, that's going to be £393.50. And for the 24-25 tax year, that's going to be £590.25. So as you can see, these numbers are starting to go up. There's not much we can do about it, and it is still beneficial to take your money out of your company as a dividend, as it still is the lowest tax rates that we will be able to apply to your income. However, it is just something to be aware of. So from a cash flow point of view and how much you're going to have to pay, you have an idea of how much these things are going to be hitting you. Obviously, as with any tax planning, at this point in time, we want to be bringing the tax forward. So if you are thinking of taking any income out, take that out before the 5th of April 2023. And then after that, it's take it out before the 5th of April 2024. so that we're taking anything out in the tax year where we get 2,000 up to the 5th of April 23, and then we're taking out as much as possible in the 23-24 tax year to just minimise those extra bits. Obviously, overall, it's not going to be happily big numbers, but it's just little bits that if you're planning on taking some out, maybe take advantage of the 0% at rate for your dividends when you can, to minimise those tax liabilities for now and in the future. Hopefully you've discovered how the changes in the dividend tax impact you and what tax planning you may need to do to minimise any tax liability you may be paying. If you have any questions, please do leave a comment. Please like the video and do subscribe to the channel. And let's make tax less taxing.